Taiwan's stock market just hit a record high, but most people are missing what's really going on underneath. The TAIEX closed at 45,624, barely budging, but the real story is in a flood of money and a single chipmaker that just changed its 2026 forecast. Subscribe to Taiwan Tech Pulse. We bring you what Taiwan's own analysts are saying, before Wall Street catches on. Got a Taiwan tech story you want us to cover? Drop it in the comments. Here's the headline: TSMC's chairman, C.C. Wei, just raised his 2026 revenue growth forecast from over 30% to slightly above 40%. That's a massive jump, and he's citing AI, data centers, and advanced node demand, the exact same drivers that power Nvidia's Blackwell and AMD's MI300 chips. So when TSMC says 2026 looks even better than they thought, that's a direct signal for anyone holding those US stocks. But here's the twist: foreign investors are selling. On this very day, foreign investors net sold 48.3 billion new Taiwan dollars worth of Taiwanese stocks. That's a lot of cash exiting the market, and it's not a one-off. Investment trusts, though, have been buying for 17 straight days, scooping up a total of 173.6 billion new Taiwan dollars. So there's a tug-of-war, foreign money pulling out, local institutions piling in. What's spooking the foreigners? It's US semiconductor weakness. The Philadelphia Semiconductor Index fell more than 2%, and memory giants Micron, SK Hynix, and SanDisk each dropped over 8%. Why? Because China's memory maker CXMT is planning an IPO and expanding capacity, a direct threat to the memory market, which is already a key part of the AI server build-out. For Nvidia and AMD, cheaper memory from China could pressure margins, but it also means more supply for their AI accelerators. Back in Taiwan, the broader market is on fire. Listed companies posted June revenue of 5.83 trillion new Taiwan dollars. That's an all-time monthly high, up 46.6% year-over-year. 189 companies set monthly revenue records, and 153 saw their revenue double from last year. That's not a slowdown, that's a boom. Foxconn, officially Han High Precision, reported Q2 revenue of 2.51 trillion new Taiwan dollars, a record for the quarter, up 40% from last year. Their stock rose 1.46% to 242 new Taiwan dollars and 50 cents. They're the assembler of everything from iPhones to Nvidia's AI servers. MediaTek, the chip design giant powering many Android phones and IoT devices, saw June revenue of 58 billion new Taiwan dollars, up 22% month-over-month. Q2 revenue beat their own guidance, and they're guiding Q3 up another 10% sequentially. That's strong consumer demand. That feeds into Qualcomm and Apple's supply chains. Then there's PowerChip, a mature node memory maker, which jumped on news of price hikes and margin improvements. That's a sign that even older chip technology is getting squeezed by demand, good for Texas Instruments and ST Microelectronics. Two smaller names caught my eye. Ching-Chi, a testing firm, expects capacity to increase about 50% by year-end, with a full-year EPS forecast of 7 new Taiwan dollars and 34 cents. And Sigatek, a quartz crystal supplier, just hit a 42-month high in monthly revenue, thanks to AI server and high-speed transmission demand. These are the kind of niche suppliers that tell you the AI build-out is real and accelerating. So what's the takeaway for you? TSMC just told us 2026 is going to be even bigger than 2025, driven by AI. Foreign investors are nervous about China's memory push, but local funds are betting big on the long-term trend. And the data, record revenues, doubled sales, shows Taiwan's supply chain is humming. For anyone watching Nvidia, AMD, or Apple, this is the ground truth from the factories that actually make the stuff. Taiwan's market is the canary in the coal mine, and right now, that canary is singing a very loud tune.